Automatic Data Processing Stock, ticker symbol ADP. This stock was mentioned a few times in my community group on Discord, so it was about time to review ADP stock. ADP stock is down roughly 3% year to date, underperforming the S&P 500, which is up 17% year to date, so that's quite the difference. From a dividend point of view, things look pretty interesting with dividend yield at 2.2%. The growth is also looking pretty good in my opinion, almost a dividend aristocrat. On the 26th of April, ADP stock presented quarter results where they beat on both EPS and revenue. However, for the upcoming earnings, analysts have a mixed feeling. So could this be the perfect moment to buy ADP stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does ADP do? ADP is a provider of payroll and human capital management solutions, servicing the full scope of businesses from micro to global enterprises. ADP was established in 1949 and serves over 1 million clients, primarily in the United States. If we dive in the most recent earnings results, we see a few interesting things. Revenue increased 9%, which is of course very nice. EBIT margin increased 110 bps and bottom line EPS sees a growth of 14%. To me, these numbers look very good. And if we dive in the segment breakdown, we see that the employee services segment is the biggest segment with an 11% growth in revenue and ES margin increased 80 bps, which is very nice. This growth was supported by healthy bookings, retention, pace per control growth and higher client funds interest revenue. Full year 2023 outlook is also looking really good with 9% revenue growth and margin at 200 bps increase. If we dive in the second segment, PEO services, we see that revenue is up 5%, which is lower than the biggest segment. But PEO margin increased 140 bps, which is higher than the biggest segment. Demand stays stable according to ADP, and for the full year 2023 outlook, they expect to see 8% revenue growth and 50 to 75 bps increase. ADP is an industry-leading company with more than 1 million clients worldwide and 1 in 6 US workers paid. Credit ratings look also really good and ADP has 40 million workers across 140 countries. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. ADP is a 95 billion market cap company. PE ratio is at 29, which could indicate that they are at a premium price right now. Later in this video I will show you my 3 price targets for ADP stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at almost 17 billion and in this graph we see that revenue went up really nice and steady. There are 2 interesting periods, with 2013 being a major dip in revenue, and during lockdown periods revenue was also kinda flat. However, most recently it is looking really good. Over a longer period of time margins are growing, which is very nice. With revenue and margins both increasing, ADP is bringing in a lot of money to the business. EPS is also going up in the long run, and after the lockdown period EPS really took off. Analysts expect double-digit growth in the coming years, but after 2026 EPS is likely to slow down to high single digits. For the revenue it is pretty similar pattern, with high single digits in the coming years, but after 2026 we see mid-single digits. Nevertheless, it is looking really good in my opinion. Return on assets is sitting at 4.6%, which is a bit of a disappointing number. Return on equity looks really good, but the most important number, return on invested capital, is sitting at 35%, which is an insane good number. On top of that, it is above the 5-year average, which is also very nice. Current ratio is at 1, which looks pretty good to me. Over a longer period of time it is really steady, which is also very nice. Total debt is sitting at 3.42 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now, total cash is sitting at roughly 1.85 billion, so they can pay down a big chunk of their total debt with the total cash, which is very nice. Nevertheless, it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run. It is somewhat of a steady pattern here. Most recently it starts to slow down, just a little bit, so keep an eye on that part. A thing that I love about this company are the shares outstanding. It's going down in the long run. It means when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.2%, which is a decent number. Annual payout is at $5 and payout ratio is at 58%. I prefer 50% or lower. So right now they have 42% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at almost 14%, which is a great number and one of the reasons why I love this stock so much. On top of that, they increased the dividends for 24 years in a row, which is very impressive. And if you take a look at these numbers, the dividend paid since 2004, you see that ADP really likes to increase the dividends, which is very nice. Most of the time high single to double digit growth year over year. And payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that over a longer period of time, payout ratio is increasing a bit. However, it has always been in the range of 55 to 65%. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at historical growth numbers, which is very nice. Overall these dividends look really good to me, but how about the historical returns? I decided to compare ADP stock with the overall market, in this case the S&P 500. Next to that I added some competitors, Workday and Paychex. On the 5-year chart we see that ADP outperformed the S&P 500 with 87% return including dividends, versus 75% for the S&P 500. Workday has a slightly lower return, which is caused due to a huge dip in 2022, and Paychex has the highest return with 98%. On the 1-year chart it looks pretty different, with ADP returning 10% versus the S&P 500 returning 20%. Workday has by far the highest return with 62%. On the 6-month chart it's pretty much the same story again. ADP is beaten by the S&P 500 and both competitors, and Workday has the highest return with almost 34%. On the 1-month chart it's again Workday that is the winner here, with both ADP and Paychex returning a negative number, while the S&P 500 is sitting at almost 4% return. So bottom line, ADP beats the S&P 500 and most competitors in the long run. But most recently it underperforms. So is ADP stock a buy at current prices? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 5, 6 and 7%, based on historical performance, their own outlook, but also because of the analysis. For both the profit margin and free cash flow margin, I'm putting in 18, 20 and 22. For the PE ratio and the price to free cash flow I'm filling in 20, 22 and 24. It's an industry-leading company that is still capable of growing at decent amounts. However, I don't want to overpay for the growth. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now, ADP stock is at $292. I hit analyze and we only see red numbers, which is kinda surprising me. We have a low price target of $121. Which is a big drop from the current stock price. We have a mid-price target of $154, which is still a big drop from the current stock price. And we have a high price target of $193, again a decent drop from the current stock price. To me, the mid to high price target is the most justified here, indicating that the stock is overvalued. My final conclusion on the stock is that I really like the business. Everything looks good to me. They have a steady and consistent fundamental, and are capable of growing at a decent amount while being the industry leading company. From a dividend point of view, things look pretty good with a great historical track record and a decent dividend yield. From a value point of view, the stock needs to drop quite a bit. But with the upcoming earnings and all analysis being very pessimistic, I do think the stock could fall big time. And to be honest, I want the stock to fall down big time. I really like the business and everything looks really good in my opinion, except for the valuation. For now, I'm just waiting for the next earnings report and I will analyze the company from time to time. I put them on my watch list and I keep finding other undervalued stocks. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.